Dear friends of Volumetric Trading, good morning from Eduardo Burattini. Welcome to this video. Analysis for Thursday, October 23rd, 2025, regarding the American indices S&P 500 and NASDAQ. So, in the last two sessions, we've seen the S&P 500 correct quite significantly from what was, let's say, its recent movement. In reality, we had come close to what had been a fairly important support level for it, because it reached the highs of 2008, a level that's definitely among the most significant. However, the correction had already been, in some way, confirmed by the presence of bearish pressure. They had already been present for a couple of weeks, right around these levels. We can see that the index corrected quite heavily to come back and retest what were more or less last week's equilibrium levels. See here, we have a naked VWAP, specifically last week's, at 6,685, and we can see that it's right here. In yesterday's session, the market had a pretty significant reaction because after going into a bearish trend for a couple of sessions, it then made a recovery from what was, compared to the VWAP, up towards 6,800, a recovery of about 100 points. All of this, of course, translates into a jump of about 1.5%. It turned around quite sharply. Now, I don't see why we can't call it that. Right near the round level of 6,700, close to 6,685, where we had last week's net VWAP. We can see that just yesterday, during the day, it formed a pretty interesting low. Why was this low particularly interesting to consider? Because it was generated by particularly significant buying pressure. Do you see this light blue line? This is an indication of order and flow, which signals a particularly significant move for the time frame on which we're observing it. And all of this happened in a technical area nonetheless. Particularly interesting, which for simplicity we'll define as around 6,700. Okay, all of this first led to recovering what was the start of this latest downward acceleration. You can see here, thanks. The market pushed decisively to create this new low around 6,750, but the real momentum started just a few points higher. So let's say this whole area, this is exactly where we have it. The VWAP for the current week. And basically, we see that this entire move has been recovered. The interesting thing to note is that this whole swing, first down, then a corrective move back up, led the index to settle in a fairly stable way. This is from a weekly perspective, so not directly about yesterday's intraday action between 6,720 and 6,760. So let's say, and this is particularly interesting because you can see here we have a potential area of balance in terms of volume. Composite profile, you can see there's a decent amount of volume. The volume isn't extremely high, obviously compared to the distribution zones at 10, but it's still a fairly stable and consistent volume. Index, definitely a sign of intentionality and interest. Generally, this situation implies, especially when the price starts to stay within these areas again, zones of potential balance. So basically, this means that most likely the price is trying to, or rather is actually creating its own equilibrium right within this range. So this is definitely the most important evidence with which we start today's session, because it's exactly what I expect. A market that tends toward a fairly balanced situation, where the most important levels are right around the 6,750 area to the north, which is a potential resistance level, and 6,715 to 6,700 flat to the south. Generally, this is a price equilibrium zone, where ideally a break below the lower part, so a return to around 6,000, below 6,700, could much more easily indicate the continuation of the short-term downward trend that seems to have started. In fact, already with yesterday's session, so at that point, the way would open up for a test of 6,685, first at 6,670, and ultimately at 6,650. This would definitely be the most likely scenario in case the now important 6,600 area is lost. Obviously, this scenario could be completely invalidated if the price were instead to attack this natural resistance that lies ahead at 6,750, the area between 6,750 and 6,760. This will definitely be the most important thing to watch. Exactly. The first phases of today's session, since the market is already trading quite close to these price levels. This is an expectation, a breakout of this area, especially if we were to actually see it happen, particularly with bullish pressure coming from the footprint or the vol analyzer indicator. Break time equals 0.5s / it would simply point us back to the issue that occurred yesterday. Like a simple, let's say, not a bearish trend, but rather something meant to continue, just a return to form, then actually trying to move the highs, simply to retest some support levels and possibly reinforce them. So, probably the most important support line for tomorrow will be this one, this area between 6,750 and 6,760. Let's take a look at what's happening on the NASDAQ as well. Let's see here. The movement here has definitely been more explosive. Here on the NASDAQ, as you probably remember from the analysis video just 2 days ago, when I specifically pointed out the area around 25,330, break time equals 0.5s / right up here, as a fairly significant resistance for the NASDAQ, where yes, of course, there was a chance, if it was accepted during the RTH 2 days ago, to go on and create new highs. But in reality, the NASDAQ had already reached an important level. And so, if this resistance held, it could have potentially dragged down the S&P. This actually happened, obviously in a more amplified way, over the course of 2 sessions and not just one. Of course, I'm saying this with hindsight, but we can see that's exactly what happened. And I would say that even today, we probably need to consider the NASDAQ as more important, because you can see that this movement of bearish test, this correction that happened from the highs actually reached a much more important level on the NASDAQ than on the S&P. On the S&P, there was the acceleration that then turned the market around, making that point an interesting high or low. Last week on Naked View app, we didn't see it before, it was missed, but instead we reached some really important levels. 24,830 as the upper part of an old weekly acceptance zone. This area around 24,870. A former absorption of sellers, which was basically what then pushed the market up until it reached the next resistance. Also, the Naked View app from last week here as well, but in this case it was taken hit and sunk. That's the right way to put it. And on top of that, as if that weren't enough, there's also a particularly prominent volume node in its composite profile. So definitely, reaching this multiple confluence of levels on the NASDAQ is even more significant than what we've actually seen on the S&P. Here too, there was a recovery up to a level. In this case, not particularly interesting, but I would say that today the most important thing will be to see if the market can actually stay above 25,000. Because as you can see here, 25,000, besides being a round number, it really acts as a line in the sand, meaning if the market manages to get back above 25,000, then we'll start rebuilding. We'll look for its UI WAP level for the current week, around 25,180, 25,200. Roughly, these zones should be considered as areas, not as exact levels. But above all, if we do manage to reclaim 25,000, then there is a significant chance, not to say that the short trend will reopen, because at that point, as mentioned before, around 24,000 or 30 or 50, it will still face all the series of barriers we just talked about. But it definitely opens up, with much more probability, the scenarios to consider for. To retest for the umpteenth time, definitely with strong protection. The truth is, it still remains to be understood. The market starts to accept if it stays especially above these 25,000 zones. Support and more interesting resistance zones are the weekly UAP at 25,180, ORFA 25,002, and of course, always the eternal 25,324, which, as we've seen, has been an important resistance. Obviously, this analysis is purely for educational and informational purposes, and it is in no way intended as a public solicitation, nor is it an incentive to take a position for those seeking volume trading. I'll see you later with the VLive, where we'll be trading with the markets open. For now, thank you for your attention. Have a great day and good trading.